All right, guys. Hi, everyone. Welcome, first of all, welcome to joining our seminar on everything you need to know about whiskey investment. My name is Freeman from Rare Finds Worldwide. So throughout the webinar, if you have any questions or if you've got any inquiries, feel free to put it in the chat or in the Q&A session, and I'll just try to go through every single questions towards the end of the webinar all at once, okay? So just a bit of introduction about Rare Finds Worldwide. We are a whiskey cask dealer specializing in Scotch whiskey with our sales team based in Hong Kong and our procurement office and bonded warehouses in Scotland. So we work with private investors and also private clients, giving them access to buy single malt casks directly from distilleries in Scotland, independent bottlers, and also private collectors around the world. So what we do is that we also provide them with warehouse management and stock management regarding the casks that our clients bought through us. So we'll help them manage, we'll help them age the casks that they bought, and in the end, when they want to exit their investment, we'll also find the proper channel to help them resell the cask into the market, or if they hope, they can also choose to bottle the cask. So the reason that we host this sort of webinar is obviously whiskey investment has been quite a hot topic for the past few years. Traditionally, of course, we have a lot of whiskey collectors who buy rare bottles around the world, and they would stock up these bottles, and hopefully these bottles would increase in value. But for recent years, it's also becoming a much more popular option for people to invest in whiskey in the form of casks. And that's basically what we specialize and what we do. Before talking about cask, of course, we are going to go back to the basics to talk about things like what is whiskey, how is whiskey made, and what is the market like in general for Scotch whiskey. And then we'll go a little deeper to talk about some cask specifications, what you need to know when you buy into a cask, and what makes how to value a cask, to be specific, and what makes cask so investable, so good as an investment. So without further ado, let's go on and start the webinar. So first off, what is Scotch whiskey? So Scotch whiskey is actually it's an industry with more than 2 centuries of history. So therefore, there's actually a lot of regulations and rules regarding what makes Scotch whiskey, and what defines Scotch whiskey. However, if we strip away most of the complicated rules and regulations, in essence, Scotch whiskey is a distilled grain or distilled malt spirit that is aged in an oak cask for at least 3 years. It is highly regulated by both the Scotch Whisky Association and also the HMRC. However, it is also categorized by Scotch Whisky Association into 5 different categories, and we're going to go through them one by one. And it's also very important to distinguish between different types of Scotch whisky, because when we're talking about investments, we're not talking about Scotch whisky in general. We're specifically talking about single malt, and I'll explain why in a few minutes later. So the first category of Scotch whiskey is the blended whiskey. So blended whiskeys, for example, are consists of most of the big brands that you would have heard of in the market. For example, like Johnny Walker, Chivas Regal, Ballantine's, all these big brands that you'll find in supermarkets, liquor store, and duty-free shops. So blended whiskey means that the liquid inside is a blend between both malt and grain spirits from various distilleries. So it can be coming from 2, 3, 5 different distilleries, and there's a blend between grain and malt spirits. The blended whiskey is a very important category because it actually contributes to 95% of the entire Scotch whisky industry sales volume. So in terms of value, it also contributes to 75%. So it's the general whiskey that people drink every day. It's the every man's whiskey, and the tastes between brands is quite insignificant, generally speaking, because the product is created and blended to suit the general mass market. So you won't find too much characteristics or too much of difference between different brands. However, it is still the cornerstone that supports the entire Scotch whisky industry. Therefore, it's very important to keep in mind that most whiskeys that are being drank in the market are actually blended whiskeys. And then we have blended malt. So blended here means that it comes from, it's a blend between whiskeys from more than one distillery. And then malt being that it's 100% malt whiskey. Then we've got the blended grain, which means that it comes from more than one distillery, and the whiskey inside composed of 100% grain spirits. And then we have single grain. Single here meaning that it only comes from one single distillery, and it's a 100% grain spirit. And last but not least, which is our protagonist for today, single malt whiskey. So single here meaning that it comes from only one single distillery, and it's a 100% malt whiskey. So when we talk about single malt, it contributes to roughly around 5% of the entire volume of single malt being of whiskeys being consumed, and it also contributes to roughly around 25% of value. So meaning that on average, single malt whiskeys are much more expensive when compared to blended whiskey in general. Because single malt whiskey only comes from one single distillery, this means that with more than 150 active distilleries in Scotland currently, you've got a lot of different brands of single malt whiskey. And it's also because each and every distillery has their own heritage, has their own very unique production method, has their own unique shape of stills and unique ingredients. Therefore, the spirits made by each and every distilleries is different. So you have different characteristics of different brands. So there is a great variety of flavors to be explored within single malt. So it's also because of this reason, when connoisseurs and whiskey collectors explore the world of single malt, they appreciate the variety of flavors and they appreciate the vast variety of selections. It becomes a habit of collecting and also trying different flavors, which drives the price of single malt to increase in general. Which is why when we talk about investment, when we talk about collecting Scotch whisky, we mostly focus on single malts, which have unique characteristics representing each and every distilleries when compared to blended whiskey in general, which are products that target the mass market. So when it comes to taste, it doesn't mean that single malt has to be more tasty than blended whiskey. For a personal taste perspective, a lot of people might love to drink blended malt, blended whiskey, blended grain whiskeys, anything. However, when it comes to collecting and investing, we are always talking about single malt Scotch whisky. So how are single malt Scotch whisky made? So first, the raw ingredients of Scotch malt whiskey is barley. So the first step is, of course, harvest. So in order to turn barley into malt, you have to go through a process of malting and tuning, and then you have to grind down the barley into smaller pieces through a mill. After that, you will soak it into warm water through a process called mashing. This is to extract all the sugar content from the malt into hot water. Afterwards, you will add in yeast for fermentation, put that liquid through copper pot still to be exact, to raise the alcohol level, and then you will transfer those transparent spirits into into oak cask for maturation for a minimum of 3 years. After that, you can bottle the spirit into bottles and present it onto the shelves. So when people talk about investing in whiskey, most people will refer to buying whiskey in the form of bottles, buying single cask offerings, buying rare bottles, buying limited editions, and hoping that they will increase in value in the future. Another way to invest in whiskey is to buy whiskey in the form of casks. These are two very different approaches. So when you buy into bottles, a lot of people might hope that their bottles will increase in value within a short period of time, which in some cases are true. However, then there are big winners. There's also some losers. So some bottle might not increase in value. The reason is that, unlike wine, whiskey does not mature in a bottle. Therefore, the increase in value of the bottle is solely determined by the supply and demand. There is no actual quality change if you keep a bottle in the cellar for, let's say, 5 or 10 or 15 years. However, when you keep whiskey in a cask, it continues to mature and it continues to change. Therefore, if you buy a cask and further age it, the value would increase due to two different factors. So the first factor is its intrinsic value as a liquid or as a drink. As the spirit interacts with the oak, it absorbs all kinds of flavor from the oak. The harshness from the spirit would go away. It just becomes a much more decent drink and complicated drink in general. Therefore, its value increased. The second factor comes from the age statement. So when you go and buy a bottle of single malt Scotch whiskey, more than often you will see there's an age statement on the bottles. Let's say Macallan, 12 years old, Highland Park, 18 years old, or Lagavulin, 16 years old, for example. So the age statement indicates the time that the spirit has spent in a cask. So in the market, as you would probably observe, the higher the age, the higher the price. So even though from a drinker's perspective, you might have a taste for young whiskey, you might prefer a younger spirit as opposed to a older spirit. However, generally speaking, it's always true that the older the spirit, the higher the price. Therefore, if the cask that you own has an older age, eventually when this spirit goes into a bottle and being labeled, the label on it can have a higher age statement. Therefore, the cask is more valuable. Therefore, the basic principle of investing in a cask is you buy a cask at a certain age, for example, 18 years old. You age it for, let's say, 4 to 5 years, and you resell it at an older age. And the profit that you gain comes from the time difference between. Then the next question is, if you could age a spirit and it becomes more valuable, can you age it indefinitely? The answer is no. This is due to the physical limitations caused by aging. So for every year you age a spirit, you lose roughly around 2% of the entire volume of the spirit. This is called the angel's share. You also lose a certain amount of the alcohol level, which is the ABV. So according to Scotch whisky regulation, for each and every year, according to Scotch whisky regulation, any spirits that have dropped below 40% ABV cannot be legally declared as Scotch whisky. On average, every year you age a whiskey, you lose about 0.5% ABV. So if you do the maths, 90% of the spirits being produced is filled into a cask at roughly around 63.5% ABV. Therefore, most likely the spirit would reach around 40% ABV at the age of close to 40 years old, which is why when you see spirits that are aged up to 35, 40, or even beyond 50 years old, they are very, very rare and basically a freak of nature. So that's why due to these physical limitations of aging a spirit, these old spirits, these old malt whiskeys price goes up exponentially when they reach an old age. It's also worth noting that the aging of spirits, the increase in value of spirits, is unrelated to market conditions. It just sits there silently creating value as it ages. It is not affected by the external economic environment, which makes it quite a good natural hedge against the market. Historically speaking, the average value of a cask appreciates roughly around 10 to 15% across the board in the trade. Of course, if you look into whiskeys that are considered as investment grade, sometimes you would be able to do better than 15% or even 20 or 25% per year. And we'll give you some examples of such distilleries or such brands towards the end of the presentation. So during the pandemic, surprisingly speaking, the whiskey market is actually not much affected. This is because a lot of investors and high net worth individuals are actually considering Scotch whisky as a risk haven. Again, this is due to the fact that cask value is linked to the years of maturation and is independent to the external economic conditions. Even during the 2008 economic recession in general, Scotch whisky in a consumer level, both in a consumer level and also in the investment level, has not pretty much been unaffected. So in order to invest in Scotch whisky, of course, we have to understand in general the market ecology. Where do these spirits come from? If I'm about to buy a cask of Scotch whisky, who am I buying it from? So the basic unit, production unit of producing these Scotch whisky is of course the distilleries. So understanding the power of aging, these distilleries would often produce much more spirits than they usually need. And of course, they are also, since Scotch whisky has to be aged for a certain number of years, when they produce these spirits, they are producing the amounts that they predict they would need in the future, not at the moment. Therefore, more than often, they would create more spirits than they actually need. For these spirits, they will actually sell them to companies which we refer to as independent bottlers or institutional investors. Independent bottlers are companies that do not make their own spirits, but they will buy spirits, they will buy casks of whiskeys from distilleries and bottle it themselves into various different brands. So these company independent bottlers, after they bought casks from distilleries, they are also happy to sell these casks to individual clients, individual investors who are interested in aging whiskey or who are interested in creating their own private label. This has been quite an amazing phenomenon in the past 5 years as independent bottling whiskeys become more and more popular. More and more bars and more restaurants or whiskey companies who hope to own their own private label have been buying a lot of casks from independent bottlers. So these casks that were sold from the distilleries into this secondary market, circulating in the market, are what we refer to as independent bottling casks, as opposed to OB casks, official bottling casks, which are owned by distilleries. These IB casks circulate in the market and are free to being traded in the market without restrictions, which makes them a very, very good asset to own as an investment. So some people might be looking into buying casks directly from distilleries, which under the name of the official bottling or the official brand of the distilleries. However, most of the time when you buy these casks, there are a lot of restrictions. For example, under the Diageo Cask of Distinction program, more than often they will impose strict rules as to how long you can age the cask, and as to whether you can resell the cask, and whether you have to bottle it or not. With these restrictions, it makes it relatively hard for an investor to navigate through the market, and it makes it hard for the investor to exit his investment in the form of a cask. However, if you buy a cask in the independent market, you are free to trade the cask however you want. It just generally makes it a much more flexible option for investors. So the market size of Scotch whisky is actually quite big. So it actually contributes to 75% of the entire Scottish food and drinks export in 2018 and 21% of the entire UK food and drinks export. So in 2019 to 2020, the Scotch whisky exports has increased by 4.4%, and currently the largest market of Scotch whisky in Asia is Singapore and Taiwan. So not only the market value in general is increasing every year, what we observe as a very important factor is that the variety of Scotch whisky being available is also ever increasing. So in 2014, each year there's roughly around 6,000 different single malts being released. However, in 2018 to 2019, this number has increased drastically to almost 9,000 different single malts being released. The average value of bottles appearing in auction houses has also increased significantly from £3,078 to £401 in 2019. So a 6.12% increase, which means that year to year, not only are people looking for more and more expensive whiskeys to buy, they are also looking for a much larger variety, which is a very, very healthy growth and healthy phenomenon for the single cask market. The Scotch whisky industry is targeted to reach 2.74 billion pounds by 2025. So in order to buy a cask, of course, you have to understand how to value a cask. Unfortunately, whiskey cask is pretty much still a closed market in general. Therefore, unlike stocks or other financial products, you cannot access the price of a cask just by a few clicks on the internet. However, what apparently is very, very transparent nowadays is the retail price of bottles. Therefore, when we want to value a cask, more than often we would take reference of retail bottle prices. But to make the right sort of comparison, you have to understand the right type of bottles to look for. And by doing this, you have to understand the difference between OB and IB, as well as batch whiskey compared to single cask whiskey. So when you buy a cask, what you're buying is an independent bottling of single cask whiskey. So an OB, again, just to recap, refers to official bottlings, which are whiskeys released directly by the distillery. And independent bottlings are basically whiskeys released by independent bottlers where they bought a cask previously from the distilleries and they are releasing these casks under their own name. Batch whiskies refer to whiskies that come from various casks being blended together. They are still single malts, however, they come from hundreds and hundreds of barrels of single malts being blended together, even though they still come from the same distillery. Whereas single cask whiskey means that the bottle of whiskey contains a liquid that comes from only one cask, meaning that if the cask has a volume of, let's say, 300 bottles, then this whiskey is limited to 300 bottles. So in generally speaking, single cask whiskeys are much higher in price when you see them in the market due to the limited supply. So when you compare the whiskeys in the retail market to your cask, what we would generally do is that we will also take let's say a 20% of retail discount. So what we'll do is that, let's say if I want to value a cask of Cooler 15-year-old, which is aging in a sherry butt, for example, I would look into the independent bottling market, find a bottle of Cooler that's 15 years old and has been aging in a sherry butt. I will look at the price, take a discount just to get an estimate as to how much my cask should worth. However, to do this, you also have to pay attention not to compare prices with antique bottles. This is because for bottles that were released many years ago, they have a certain historical and antiques value. So, for example, if you look at a bottle of Highland Park 18 years old, that was bottled during the 1970s, compared to a bottle of Highland Park 18 years old that was bottled in 2018, you will find that the old bottle is much more valuable due to historical and antique value. Therefore, when you compare bottle prices with cask prices, just to make sure that you always look at bottles that are released, let's say, within the previous 10 years. That would give you a much better estimation. So in order to find yourself a right cask to buy, you have to understand your investment goals and your position. So this is called what we refer to as a DCI model. A DCI stands for drinker, collector, and investor. So these people are all cask buyers in the market, but more than often they are aiming at different types of casks. For example, a drinker would care about the quality. Investor would care about whether it's the quality of the cask, whether it's a single cask and whether it comes from an iconic distillery, whereas a collector would just buy out of passion and is open to buy whatever they want as long as they love it and they can afford it. So the sweet spot, obviously, being the most flexible option in the market, are casks that come from a renowned distillery, at a mid-range price, has a mid-age being middle-aged. Middle-aged meaning it ranges from 15 to 25 years old and has a high ABV. However, whatever you want to buy, generally speaking, we do not recommend people buying really cheap casks that are aged 0 to 3 years old and coming from unknown distilleries. Although in principle, all casks, as they age, they would eventually gain value. However, for casks that come from unknown distilleries and are very, very young, generally speaking, you have to wait a long, long time before these casks become popular in the market. So as an investor, from an investment point of view, you are stuck with the cask for a much longer time. As an investor, you always want to balance a good balance between the yield and also liquidity and your flexibility. If you buy casks from a renowned distillery at whatever age it is generally much easier for a broker to help you find a buyer if you want to liquefy your asset. It's also much likely that you will get a good price if you put your cask towards an auction. So there are various factors that affect the cost of the price. However, the most important two factors to look at is always the distillery and also the age. So the distillery would tell you a lot about the spirit quality. It tells you about the marketing tactics if you look behind the distillery and look into the company that owns the distillery. It also gives you a lot of idea regarding the history and also the fame. Pretty much the distillery represents the brand of the cask, and therefore the popularity that associates with it, as well as the quality or the perception of quality, to be exact. And then the age. So the age is very simple. So again, in the consumer market point of view, older always means higher price. So older means that it's spent time in the cask. There's a cost of time. There's a perceived value with old stuff, and there's also a perceived value with older being higher quality. Even though for your personal taste, you might not necessarily prefer older whiskeys as a drink, but it's just a fact that in the market, older whiskey can always charge a higher price. And as an investor, you have to bear this in mind very, very carefully. It's very important for an investor not to let your personal taste and personal preference of whiskey get in the way of investing and get in the way of you making money. When you want to make money, when you want to invest, it's always important to remember that old whiskey is always more expensive. The next important factor is the cask type. So the most popular two types of cask being used in the industry are either sherry cask or bourbon cask. So there's 10% of sherry cask in the market and 90% of it are bourbon cask. Therefore, as you can imagine, sherry cask more than often it charges a premium. However, they also have a better value, better potential of appreciation. Bourbon casks are also very easy to buy and sell. It's the majority of casks being used in the industry. Therefore, it's always great to buy a bourbon cask as the foundation of your investment. And then less than 1% of casks being used in the industry are either wine casks, rum casks, beer casks, brandy casks, and all types of quirky options. In the recent years, wine cask has actually become quite increasing in popularity. However, generally speaking, they're still not as popular as the other two, but since they are also quite rare, they still have a unique and novelty value in the market. So when compared to wine, the vintage of the whiskey is actually not important at all. So in whiskeys, generally speaking, there is no such thing as a great year or a bad year. So the vintage just tells you about what is the age of the whiskey. When it's distilled, you minus current year from the distilled year, you get the age of the whiskey. However, there are certain years that are much more valuable compared to others. And then it comes to the ABV. So the ABV doesn't necessarily affect the price by a lot. However, it does determine the aging potential. Again, you cannot allow the ABV to drop below 40%. Therefore, if you're a long-term investor and you aim to age your cask for, let's say, 10 to 15 years, just to make sure that you buy a cask that has a high ABV. So casks also come in various sizes, obviously. So you've got these tiny casks that are called blood tub, octave, quarter casks, which can basically be anything. These are casks made specifically for the sake of increasing maturation speed. And then you have the American Standard Barrel, which is a popular option in the market, which are bourbon casks. You also have the hogshead, which can be a bourbon or a sherry cask. You have port pipes, which are larger casks, which have been filled with port wine previously. And then you have the popular sherry butt and sherry puncheon, which are gigantic casks with over 500 liters. Now it comes to the brands. So again, we only really consider the top 40 to 50 brand names of distilleries as investment grades. This is because with more popular distilleries, it's much easier for an investor to resell your cask. With popularity comes value. So the blue chips in the market are obviously Macallan, Bowmore, and Dalmore. These three are the big brands that you will find often in auction houses, where one of the bottles can reach up to more than $1 million Hong Kong dollars for just one single bottle. So the price has been ever increasing for the past 2 decades, and it has not shown any sign of slowing down for the past year, I would say. Even during the pandemic, even during 2020, Macallan, Bowmore, and Dalmore prices has still been increasing and record-breaking in auctions. And then we have the front runners, which are the likes of Lefroy, Springbank, Clynelish, and so on and so on. So these are also distilleries that are considered legendary by whiskey connoisseurs and whiskey collectors, even though their prices has not yet reached the level of the likes of Macallan and Bowmore. However, any one of these distilleries, if you are able to get your hands on one of their casks, assuming that you got them at the right price, you are deemed to make a good return due to their increasing popularity and due to them being extremely hyped. Next, we have solid and strong options, the likes of Quiller, Highland Park, Mortlach, Bunnahabhain, so on and so on. So with these distilleries, even though they are not considered as really, really hyped, but they produce absolutely amazing and excellent spirits, and they have a very, very strong fan base around the world, and they are also widely distributed globally, and they have a very, very strong team of marketing team behind them, since they are all owned by major global spirit conglomerates. They do very well with their marketing, and they produce good stuff. Therefore, if you are able to get your hands on one of these casks, they are also going to give you a very, very good return, and I highly recommend them being as a foundation of your portfolio, because they have so much upside, and their prices are still very, very affordable. And then for more speculative options, we have some rising stars. For example, Glenelgin, Glenkeith, Lechick, Ben Reens, Ben Nevis. With these brands, if you are not a active whiskey enthusiast, it's very reasonable that you have never heard of any one of these names. However, these are still very popular names within the whiskey enthusiast community. They have a lot of very high quality release with independent bottlers, and their spirits are absolutely amazing. Even though they are not considered as widely distributed globally, and they have a lot of potential to grow as a brand, given that their spirits are so good, at any point of time, if their owners decide to market them much more aggressively, they can anytime grow a couple of folds in value. Therefore, they make very, very good speculative options for more adventurous investors. So in order to start buying a cask, what we would do is that generally, of course, we will have to establish your personal investment goal or reason to buy a cask. People might buy a cask for various reasons. Some may buy it for an anniversary, some may buy it just for fun, to drink, or for investment. For investment, you have to set up a budget of how much you want to invest into a cask. You have to have in mind what type of time frame you are aiming to hold a cask for, and whether you have a preference with distilleries. After that, we will be able to find you a cask that suits your requirement, that is suitable for you with your specific personal investment goals. After choosing a cask, we will handle all the paperwork and the entire procurement process. We will help you move the cask to facilities under our management and help you take care of the cask through its entire investment journey. Once you finish your investment journey, once you hope after a few years, maybe you think it's the right time to sell your cask, we will be able to find you the suitable channel to sell your cask. For example, you can go through us, sell it back to our network of customers. You can sell the cask through auction houses, or you can simply, if you like, take it to another broker. with the right documents, with the certificates, with the ownership, with the delivery order, you can pretty much nowadays take your cars to any auction house and they will accept it as an auctionable item. Again, with investment grade cars, we target all our cars to achieve at least 15% per of capital increase per annual. For better brands, maybe if you choose something that are truly a hidden gem, you might be able to achieve 20 or 25% or even better. Just to recap again, all cars will be stored at third-party bonded warehouses with bottling plants. So therefore, if at the end of the day, if you don't want to resell your cars, if you fell into a passion of love with your whiskey, you can bottle it and have it shipped into wherever country you are at. We will provide sample draw with the cars that you own so that you can keep track as to how your cars taste like through the years of maturation. We will be able to visit your cars should you visit Scotland. We will also provide re-racking service if necessary. Some people might buy a bourbon cask and they wish to transfer it into a sherry hogshead. We will be able to do that for you as well. We would suggest with old cars to do an annual regauge just to keep track of the ABV level as well as the volume of the liquid. With younger cars, you don't have to do it annually. You just have to do it, let's say, every 3 to 5 years. With Rare Finds Worldwide, we will cover the storage and insurance costs for the first 3 years. And after 3 years, it's £65 per year per cask. So it's a very minimum fee. Storage in Scotland is generally very, very cheap. So it's pretty much a negligible cost to manage a cask. So that pretty much wraps up everything. So if you guys have any questions regarding anything I said, feel free to pop it in the chat or in the Q&A. I'll stay for another 10 to 15 minutes just to answer all your questions. And also, I'm also going to leave my contact in the chat. So if you guys want to keep in touch, if you guys want to contact me, feel free to give me a call or feel free to send me an email. In the meantime, thank you very much again for attending this webinar. I hope that you guys have enjoyed it and have some takeaway. Thank you. All right. Tian asks why cars will be put in HMRC. No, the casks will not be put in HMRC. The casks will be stored in HMRC licensed bonded warehouse. So just to further elaborate, all bonded warehouse has to be licensed by the UK government. This is because all casks are taxable commodities, and the HMRC has to keep track of every single cask, and they have to keep track of each and every cask owner. So this is also a great advantage with investing in casks compared to investing in bottles, which is the issue of authenticity. So with bottles, sometimes people would encounter fake bottles in the market. However, with casks, there is essentially no issue with encountering a fake cask. This is because no one can actually pop up a cask out of nowhere. They all have to be registered with the government in licensed bonded warehouse. Do you have a minimum investment amount? So with the value of casks, they really do vary a lot when it comes to different distilleries and also different age. So the youngest cask that you can purchase in the market can be as low as £2,000. However, generally we do not recommend any casks that are below 5 years old. So with casks that are generally 8 to 10 years old or older, they start with roughly around £8,000 to £10,000. But with the best sort of middle-aged cask that gives you a good option, the type of casks that are most popular amongst investors, 15 to 25 years old from renowned distilleries, they are generally between £30,000 to £60,000. However, with really premium casks from renowned distilleries, for example, if you're looking at a 25 years old Bowmore first fill sherry cask, for example, they can go up to $1 million or 2 million Hong Kong dollars, so 100,000 to 200,000 pounds or even beyond. Right, so I've got a question. What is the minimum period between buying and selling? So since you own, once you bought a cask, you do own the entire ownership and freedom to do whatever you want with the cask. Therefore, there's no actual bonded lockup period whatsoever. You're free to sell your cask anytime you want once you own it. However, generally to make a substantial return, we generally advise you to age your cask for roughly 3 to 5 years. What is the what compare ourselves with other competitors? So I would say that with Rare Finds Worldwide, we have an excellent procurement team with really good connections with a lot of independent bottlers and collectors in Scotland. So we do generally gain access to really premium and world-aged casks from top-notch distilleries. So we have sold and procured a lot of Bowmore, Lefroy, Springbank, Clynish. Most brokers in the market would not have access to these sort of stocks. And we are really good with getting casks at the premium end of the market. What is the cost of keeping an insurance after 3 years? So the cost of keeping a cask is £65 per year per cask. This is including the insurance. So another question, are all transactions done through Rare Finds, including payment? Yes, that is correct. So if you buy a cask through us, we will handle the payment, we will handle the international transfer to the seller of the cask, and we will also handle all the documentations as well as the physical logistics of moving your cask in Scotland. All right, so let's say at the end of 5 years, if I decide to sell my cask, what is the turnaround time between putting my cask for sale in the market and receiving my profits? So that really depends on what sort of price you put on your cask and whether your cask comes from a top-notch popular distillery. So with a very popular distillery at the right price, we could pretty much sell your cask in a couple of days. It's very easy. If with the right buyer, you will receive your money right away. The reason is that with casks, people are not able to get mortgage with casks. Therefore, everyone would have to pay in full. So once we've received the money from the buyer, we'll transfer you the money if you're the seller. It's almost an immediate process. So it just depends on whether your cask is a popular item in the market and what sort of price are you asking for. So, however, if you bought a cask that is from a bottom tier distillery, even though they are still on paper, they still worth a lot in the market, it will be much more difficult to find an appropriate buyer, and it will be much more difficult to exit your investment. That's the main reason that when we recommend people investing in whiskey, investing in casks, you have to buy casks from good distilleries. Are you based in Hong Kong or London? So we are based in Hong Kong with the sales team in Hong Kong and our procurement team and bonded warehouse in Scotland. Right, so will Refinance Worldwide assign investors and advisor who will help us monitor prices and advise us when to sell? Yes, basically that's what our brokers would do. Definitely. However, you got to understand that with casks, it is not a highly fluctuating market like the stock market. So with cask, it's pretty much like buying real estate or property. It's not something that you monitor its price on a daily or weekly basis. It's a mid to long term investment. But of course, with casks, each and every year, you will see a significant increase in value for your cask. We will be able to give you an update regarding what roughly your cask is worth in the market, and we will be able to advise you what type of price you want to sell and what type of timing you want to sell. In fact, at the time you are aiming to buy a cask, let's say, for example, if you are buying into a 18-year old Lafroy, for example, we will already advise you to aim at selling it at 21 years old or 25 years old. This is because at certain years of certain particular distilleries, with these popular anniversary years, the 12, 18, 21, 25, 30, 35, these whole number years are usually the better time to sell, as we do see significant spike of price in the market with cask reaching these sort of age. So yes, the short answer is yes, we will have an advisor who will advise you as to what your cask is worth and as to when to sell. Can you share with us whether you have a compliance team internally and what they do? Well, of course, with any sort of investment company that deals with documentations, we do have compliance people in our office. They will help us look into contracts, do the due diligence in regards to HMRC regulations, Scotch Whisky Association regulations, as well as due diligence on whether the documentations presented to us are legitimate, and due diligence with the bonded warehouses as well. Does your cask price get affected by certain crises like current pandemic COVID-19? I would say for the entire 2020, we do not see any sort of price drop regarding the whiskey market. It's quite easy to see that throughout the entire 2020, even though people are not allowed to travel, even though bars are closed, even though people are not allowed to go out to drink, the collectible whiskey market, the general investment grade whiskey market is still soaring. Auction prices have been ever record-breaking high in general, and also if you actually look into cask prices, people are actually shifting their money from traditional financial assets to alternative assets such as whiskey. Again, whiskey is actually being considered as a risk-averse asset and as a price-rigid asset when compared to stocks, when compared to other financial products in general. How many casks do you manage now? Well, personally, I manage roughly around 80 to 120 casks under my portfolio. And of course, different brokers with various different experience. Some people might have much more casks in their portfolio with their much larger client base. Some people might have less if they just started. But generally speaking, we do manage a lot of casks. Are your clients mainly from Asia? Yes, the answer is yes. So since we're based in Hong Kong, most of our clients are from Asia. That is correct. Why is it popular in Asia? Well, whiskey is popular across the board. I mean, it's popular globally. It's not just popular in Asia. However, it is Asia. It is the Asian market where it's in a lot of countries that it's just started to gain popularity, which is where there are a lot of upside. So if we look at the global market, the number one export market of Scotch whiskey is actually the US, it's the States. So there have been, it's been popular for a long, long time. People drink bourbon as well as Scotch whiskey. Of course, Europe, all around Europe, people have been collecting Scotch whiskey and drinking Scotch whiskey for so many decades. And however, with Asia, Taiwan and Singapore has been a traditionally strong market, with India and also China coming up vigorously. In fact, for China, a lot of high-end drinkers are actually willing to pay a lot of money for very, very high-end whiskeys. So I would say that it's popular globally, whiskey as a drink or as a collectible item, but it is Asia which actually lags behind and is currently catching up. All right, I think that pretty much wraps up most of the questions. Of course, if you guys think of any questions later on that you forgot to ask, just pop us a message, send us an email. You've got my number and you've got my email address. And hopefully you guys have learned something today and find it fruitful joining us today at the webinar. And hopefully we will be able to speak again soon. Thank you very much. Bye-bye.